Hello, everyone, and welcome to today's webinar on U.S. Paystub and benefits. We're excited to have you join us today. Let us know in the comments where you're watching from, and if you have any questions, we'll address those at the end of the webinar. And before we get started, I want to introduce Jenny Tatum. She is the Corporate Payroll Supervisor at Medical Solutions. Jenny, I'll pass it over to you.
Hi, thank you all for being here. I'm Jenny Tatum. I'm Corporate Payroll Supervisor for Medical Solutions Group, or MSG. I have a Bachelor of Science in Healthcare Management, and I've been in healthcare for about 30 plus years. I also work a PRN gig in the evening for an LTAC, a long-term acute care facility here in Omaha, Nebraska. But I've been with MSG for about 6 years. So I live in Omaha, which is the New York City of the Midwest. I'm just kidding. We only have about 1 million people, but it's a nice place to live. I also want to state that this is my first webinar, and I'm so glad you're all here to experience it. And I will do my best. I'm not the greatest at following the chat, so if you need me to pause, let me know. So we're here to go over U.S. pay stubs and benefits and what to expect. So what is a pay stub? A pay stub is more than just a piece of paper or PDF with your paycheck. It tells a story of how much you earned, who took a piece, meaning taxes and deductions, and what finally made it to your bank account. A pay stub is a summary of your earnings for a specific pay period that displays your total pay, displays how your total pay was calculated, including deductions and taxes. So think of a pay stub as an itemized statement listing what you earned, what was deducted and withheld, and how it impacted your paycheck. So the pay period. The pay period should be included on your pay stub. And a pay period is a block or set of dates that you worked or earned, and what you worked or earned in that block of time should align with your pay stub and paycheck. You are paid for what you worked during the pay period or set of dates on the coinciding paycheck. So for an example, I'm an internal employee for MSG. I'm paid biweekly, and our pay period starts from Sunday and ends on a Saturday. At the PRN facility I work at, the pay periods are Sunday to Thursday, but whatever I work within those dates should be accounted for on my pay stub. Your pay date. Who doesn't love a pay date? That's the day we get paid. That's the day we receive our payment for all of our hard work. On the pay stub, there should be employee and employer information. For the employee, it should include your name, address, and employee ID if applicable. You should always confirm that it's your information on your pay stub. You don't want to be paying for someone else's weekend getaway or going on a shopping spree. So it's always best practice to check your information on your pay stub. Make sure your information is up to date as well. For example, if you recently moved and you notified your payroll department or HR department, but your next check still has your old address on it, you would need to notify your payroll department to have that corrected. Just always validate the information that's on your pay stub. And for the employer, that should include the employer's name and address. Okay. So gross pay. What is gross pay? Gross pay is what I wish my net pay was. So gross pay is your before picture. And it's your earnings before any tax, withholdings, or deductions. So your hours and earnings. So the hours and earnings section of your pay stub is where we connect the time you worked with the pay you earned. So it shows different types of hours and the coinciding pay rates. So example, regular hours, regular pay rate, overtime hours, overtime pay rate should be listed under the hours and earnings section of your pay stub. Everybody's favorite topic, taxes. It's such a blast. Think of federal and state taxes as your contribution to the biggest group project ever. So things like Social Security, Medicare, government programs. On your pay stub, your federal, state, and local taxes, if applicable, the withholdings should be listed separately as their own individual line items under the tax section of your pay stub. So I think next one. Let me know if I'm going too fast. Okay. So deductions. This is the amount of money withheld from your total earnings. I refer to deductions as the only auto pay that I will ever sign up for or ever agree to. But it goes to pre-tax or post-tax deductions. So even though it's being withheld from your check, it's covering these items. So pre-tax deductions, these are amounts taken out of your paycheck before taxes are calculated. Because they come out first, they reduce your taxable income, or the amount that is used to figure your taxes. So medical, dental, vision, healthcare premiums, and 401k. Those are pre-tax. Post-tax, these are the amounts taken out of your paycheck after taxes have already been calculated. They don't lower your taxable income, but they still go to important things such as charitable contributions and some life insurance premiums. Next. Net pay. This is the final amount you receive after deductions and tax withholdings. This is your take-home pay. This is what is on your paycheck. Year to date is the cumulative total of earnings, deductions, and tax withholdings since the start of the year. Generally on a pay stub, there'll be a column for the current amount and a column for the year-to-date amount. And that applies to earnings, deductions, taxes, etc. But a pay summary, it's what you made in total, what was taken out, what you get to keep or take home, and how it all adds up for the year. Next. Health benefits. Okay, like I said, this is the only auto pay I will ever sign up for or agree to. The cost of benefits, so your medical, dental, or vision, can be split between employer and employee based on the plan document the employer drafts for the calendar year. So there's an employee and an employer deduction. The employer covering their part of the premium, and the employee deduction reflected on the pay stub covering the employee's part of the premium on that paycheck. What the employer covers depends on budget and compensation strategy. So basically, the share of premiums the employer pays versus what you pay depends on their financial resources and how they've chosen to design their compensation package. Next slide. Okay, so here's some additional benefits employers may offer. Short-term disability, also called STD, provides income replacement for a temporary period if you're unable to work due to illness or injury. And long-term disability, or LTD, offers income replacement if you're unable to work for an extended period due to a serious illness or injury. Term life insurance pays a benefit to your beneficiaries, a person you designate to receive the benefits of the policy if you pass away during the term of the policy. That was kind of a downer. Let's talk about 401k. Okay, so 401k is a retirement plan. So kind of think of the 401k deductions as money you're sending through like a time machine. Today's paycheck funds tomorrow's retirement. So a standard 401k does have special tax benefits as it is pre-tax and reduces your taxable income in the year that you contribute, which means you pay less in income tax now. The deduction is also listed under the deduction portion of the pay stub. So depending on the employer or the 401k plans will vary by employer and 401k provider. And the match percentage of compensation or flat dollar amount will vary based on the plan year. So here's an example. It's a common example. Employers will match up to 4% of the employee's contributions at 100% match rate. Okay, so whenever I hear this, I'm kind of like, okay, I don't know if you've ever seen Anchorman, but there's a scene in Anchorman where one of the guys goes, 60% of the time it works every time. And I'm like, that's not math isn't math, and that doesn't make sense. And that's kind of how I feel about 4%, 100% match. So basically what it's saying is, here's a good example. If you make $50,000 a year and you contribute 4% of your salary, that's $2,000. So 100% match of that 4% would mean your employer is going to contribute up to that $2,000 or your match. So, but like I said, 401k plans, they're different. And sometimes the matches can get more complicated than that. But I'm not a 401k specialist, so that's kind of the basics of 401k.
Awesome. Thank you so much, Jenny.
Yeah.
I'm going to give everybody a moment to put some questions in the chat. Everyone that's watching, if you have questions for Jenny about the things that she covered, or just have any general questions, go ahead and put them in the chat. But Jenny, I have a few questions that are common ones that the recruiting team sees from nurses that I was hoping to ask you. The first being, how often do employees get paid in the US? Obviously, it can vary, but what is the most common?
For clinicians or traveling clinicians, I believe it is weekly. That's fairly common. Like I said, at the LTAC facility I work at, that is how our traveling clinicians are paid weekly, but our internal employees or our core staff are paid biweekly. So that's weekly or biweekly. I've known a few places that pay monthly, but it's not for hourly. That's like only salary. So biweekly, every 2 weeks is really common, or weekly.
Perfect. Awesome. And then how are checks typically paid out? If I'm a new employee in the US and I've never gotten a paycheck before, do I expect my employer to give me a check, cash? Does it go to my bank account? How does that work?
So mostly there's employee portals, and you self-service enter your own direct deposit information. And then that's where that account, once approved, that's where your check goes.
Awesome. Now, if I've never had taxes taken out of my paycheck before, what are the things that go into figuring out how much my taxes will be? Obviously, that depends on the state, but what are the things that they take into consideration?
Okay, so one, your earnings, how much you're making, your W-4 form election. So how you complete the IRS form W-4. It directly impacts how much is taken out. That's your filing status, dependents, any additional withholding. That is kind of the W-4 is your earnings in the W-4 is the main driver for how your taxes are calculated. Pre-tax deductions also, they lower the amount that the federal tax can, they lower the amount that you can be taxed. And then of course there's like the IRS tax tables. There is a really great tool out there. The IRS has its own tax calculator. And you can just go to the IRS website, put in tax calculator, and it walks you through step by step the things you need to answer. We utilize the 15T, the IRS 15T, but we use the percentage model. I can't speak to what other clients or facilities are using, but it is if you can plug in like what you're expected, what your deductions will be, what you're claiming, and it can give you kind of a roundabout or near total of what to expect to have coming out of your check. Now that's just for federal. Each state varies. I mean, there's several states that don't even have federal income tax, and I used to have them memorized, but I don't anymore. Actually, yes, I do. It's like Alaska, Nevada, Texas, Wyoming, Florida, South Dakota, Tennessee, New Hampshire, I believe, don't have state taxes. But there are some states that not only do they have state taxes, they have local taxes. So it drills down even further. I believe Ohio is one, Pennsylvania is another, and then like states like New York City have the metro tax, items like that. So those can all vary.
Awesome. Thank you. That's super helpful. And then lastly, if I am a nurse that's contributing to my 401k, every paycheck I'm putting money in there, when can I expect to get paid out for my 401k?
So it depends on your plan. The plan that, so I have two. I have one at the LTAC I work at, and then one at MedSol. I believe you really can't cash those out until you are no longer with the organization. That's kind of how I've understood it. I know that there's hardship withdrawals that you can take or loans you can take on your 401k. But like I said, that all depends on your plan. So the best person to contact would either be your 401k administrator or the provider itself. Like we use Fidelity. So if I had questions on that, that's who I'd contact. But
Awesome. Thank you so much. I think those are all of our questions today. If you are joining us and watching this webinar and you still have questions or want to know how it works for your specific employer, you will be going through an orientation process with your employer when you arrive here in the US. And your employer has an HR department and payroll specialist, just like Jenny, who works for Medical Solutions. Your employer has individuals who you can go to and ask questions of. We know that this can be overwhelming, especially if you've never heard some of these terms before, but rest assured that you'll have the support that you need to answer the questions that you have when you start working at your U.S. employer. Awesome. Now, if you'd like to refer a nurse friend, we have a nurse referral program where you can earn up to $250. So if you have nurse friends that are interested in applying, go ahead and use this link, and we would love to assist them. Awesome. And then you can connect with us on many different social media platforms, our Facebook page, our YouTube channel, our Instagram account. If you only caught the tail end of this webinar and you'd like to hear the rest of it, this will be posted back on our channels. And of course, you can always find us at healthstaff.org. Our website has been newly updated, and we would love for you to check it out.
Perfect.
Awesome.
Thank you so much.
Thank you, Jenny.
Thank you.
Thanks. Bye.